Hello and good morning. I welcome you to the morning meeting today on Friday, the 2nd of March 2018. This is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers. We want to have a look at the markets, and things are turning deep red into the weekly close. So the DAX has already shown some weakness yesterday and accelerated into the evening. And what I have to say is that now, into the weekly close, we are trading short of a very, very crucial level. And I'm talking about the level around 11,900 points. If we break below that, it could get really deep red into the weekly close. We will see this, and we've mentioned it, by the way, already several times in the past, this region. I have to say I'm a little surprised to see this pressure building that fast, even though if you looked at the price action at the beginning of the trading week, what you could clearly see is that there was no real willingness to push the DAX higher and significantly above 11,000 and 12,600 points. 1 second. So here, that's the daily chart. First of all, let's have a look here at this level. So crucial level. After we've broken below the simple moving average 200, we can clearly see that this is a relative low here, which was formed and which is in fact holding this structure of higher highs and higher lows in play. So the moment we break below this, we definitely talk about a break of this structure, of this sequence of higher highs and higher lows. So the uptrend is definitely broken once we go below 11,900 points, and it's a clear bearish sign. And in fact, this gives us further room on the downside for another 400 to 500 points. So not sure if this will really happen today, because again, we are highly dependent on the US equity markets, and they are still, from a technical perspective, let's say solid. Even though what we can definitely see is that the short-term support which could be found here around 24,600 points, was broken yesterday. Not broken, but this structure here, this short-term structure, this corrective move with a higher high and a high low, after this flash crash at the beginning of February, it was at least the structure was interrupted yesterday. Not sure whether we will accelerate further on the downside. If so, if volatility keeps on pushing higher and the Dow Jones keeps on dropping like a stone like yesterday, I think the DAX definitely has room for another, like I said, 300 points probably, if we go below 11,900 points. So all in all, you can already see that I am definitely not willing to take any long engagements right now, but consider the overall advantage to be found on the short side. That's also quite clear, not just because we have falling highs and falling lows here on an intraday perspective on a 5-minute time frame, but also we are trading below this exponential moving average 50 on a 5-minute time frame, which is usually a very good indication that at least there is no real demand in the markets, and the attempts to make it back above this exponential moving average yesterday both failed, as you can see here. So this said, obviously we should definitely consider short engagements over long engagements, and again, we're not really seeing, let's have a look here at this. And we started out the trading day around 12,100 points. And we haven't seen a sharp attempt here to break the structure of falling highs and falling lows. Okay, there was one shortly after the spot market opened, when Xetra opened here at 9 a.m. We pushed slightly lower, didn't make it below the lows from yesterday, and then reversed, but couldn't make it above the 50 exponential moving average here. We weren't even close to make it towards, not saying above the highs here, around 12,100 points, which is a clear bearish sign. And when we made new lows, now if there was really demand and the willingness to initiate a sharper reversal, I think we could clearly see that. And it's not that we can see anything at all, but it's all the time higher supply than demand, obviously, and the market is drifting lower. Right now we can stabilize a little. Volatility is calming down a little, even though I'm not really seeing here why now, especially into the weekly close, strong buying should take place. So probably it's initiated in the afternoon then with US equity markets, and again, we are highly dependent on them, but if there weren't any US equity price action today, well, I'd be sure that we definitely see at least one attempt to attack 11,900 points, with knowing that on Sunday there is an election in Italy. I have to say, I don't really see big volatility to come based on that election. Nevertheless, the thing is that there's still some skepticism, let's say, that the result won't be pro-European, let's say. And with this fear in mind, I think there's a good chance that buying a power here will definitely come into the market, or buying forces won't come into the market today, probably on Monday then, if at all. And so with this in mind, again, we are highly dependent on the US equity markets. Let's see what they deliver. But I have to say, if you carefully watch what happens here in the Dow Jones, this is not a positive sign at all. And if we accelerate here on the downside, and this is something we have seen it. We can easily make it again down to these lows here from the flash crash. Flash crash. So around 23,250 points. We're talking about over 1,000 points from here. But again, it's 1 month ago. You have seen it's easy to push the market in this direction, to get to see a domino effect. Even though volatility is elevated compared to 1 month before, nevertheless, liquidity is still quite thin, and with thin liquidity, such domino effects can easily take place, and we get to see such an acceleration on the downside. And that's one thing where the DAX bulls then have definitely or something they have to fear, because again, if we break below 11,900 points, there is at least further room down for another 200 to 300 points. Probably we'll make it easily, and with one rush, let's say, down towards the December 2015 highs around 11,500 points here. So yeah, all in all, the picture is not positive at all. Now the question is, can we formulate some kind of trading setup? Unfortunately, it's really difficult. If you're not yet short, probably it's a little too late to get in short. On the other hand, it's really too late. If you're now going short and we have another potential for 400, 500 points, as I pointed out, well, sure, it's not too late to get in now. But I have to say that from a risk-reward perspective, I'd preferred a push back here towards 12,000, 12,020 points to these lows, and then shorting the DAX from here. Unfortunately, that was something I mentioned in the German version of the morning meeting. That was something we haven't seen. But in fact, the market is just drifting lower. And yeah, so with this in mind, I think chances are decreasing that there will be a pullback, and so far it doesn't look promising at all for the bulls. And again, 11,900 is the crucial level. I have a thought which I formulated only in a German piece, but I want to present it to you here. So next week we have on Thursday the ECB. This is in fact very interesting, because I was wondering after the last meeting 6 weeks ago, I was wondering, when does the ECB / Mario Draghi in the press conference here start an attempt to somehow down-talk the euro, probably, which is, by the way, supporting for the DAX. Nevertheless, the problem is that this event takes place next week on Thursday. But let's have a look here at the euro now, and go from there, let's say. So if you see the elevated level at which the euro is stabilizing, and if you remember the quite harsh rhetoric Mario Draghi was using 6 weeks ago, one day after the comments from Steven Mnuchin, the US Treasury, US Treasury, that's the right name for them? Finance Minister? I think, yeah, that's probably a better way to put it. But however, Mnuchin down-talked the US dollar in Davos quite actively. We remember the volatility back then. You probably remember here, 24th of January, that was when we easily pushed above the highs we've seen in the first 2 weeks of trading, and in the euro here above 123 and pushed towards 125. And so this sell-off in the US dollar, which was initiated there, caused a reaction from Mario Draghi on his press conference then on the 25th of January. And he was quite direct and said that such rhetoric interventions were clearly discussed and addressed at one last meeting. I think it was in September, October in 2017 in Washington, and they were considered and addressed as a no-go. And so the thing was that Draghi hadn't really the chance, based on the comments from München here, to now try to down-talk the euro here in some way. Which way? Well, and the thing is that now I think next week on Thursday, there's a good chance that Draghi will do exactly that, and he will use a development which is, let's call it kind of an invitation probably. Let's have a look here again at the euro area inflation rate. It was published on, was it Tuesday? I'm not sure. Tuesday? Wednesday? So look here. 28th. Okay, was Wednesday. So numbers were published here, and you can see a tendency which is surprising given the fact that the crude oil prices, respectively energy prices, were rising from June last year onwards after we pushed aggressively lower. Some might remember high volatility in crude oil here last year at the beginning, respectively in the first 6 months. And from there, we started a sharp reversal and pushed aggressively higher, currently trading half a year and a little more than that, 9 months, trading over 50% higher than we were trading here in June last year. And the interesting thing about this is that within this time span, you can see that there was a short increase in inflation in the euro area, but it decreased again from November onwards. So November topped at 1.5%, and from there we just went lower. And this is surprising if you now look at energy prices and developments here. So if this is taken as a reason from Draghi at the next press conference next Thursday to somehow mention that there's a chance that the QE program from the ECB will be prolongated, since this is a tendency which at least indicates that the economic growth in the Eurozone here is not as strong as expected probably, that then the ECB could say, hey, we still plan to support the euro economy here with cheap money, let's call it. So with expensive monetary policy approach here, till we, I don't know, reach this or that level in terms of inflation, whatever. And this alone is capable of then pushing euro lower, plus if the DAX really breaks below 11,900 points here, would be capable of stabilizing the DAX. But again, this is something to discuss and expect higher volatility next week on Thursday. Till then, I think we can clearly see that there is lots of pressure building and that the DAX has probably not seen its lows here, but has further room on the downside. So this said, if you're not short, I definitely would be really careful to be long in such a market environment. If the market really wants to reverse most of the losses it's seen from yesterday onwards, well, first thing to wait for, I think, is that we make it back above the 50 exponential moving average on a 5-minute time frame from an intraday perspective, really short term. If you look at the hourly chart, I'd say everything below 12,600 is should be considered bearish here, and that's it. So that's it on the DAX. Respectively on the euro, no, not really on the euro, because, well, I want to give a deeper look in my thoughts I just presented. So the thing is that now we have seen a first attempt, but we're capable of holding the support region around 2170, 2220. And now the pullback is, well, quite aggressive, let's say, but nevertheless below 123.50 here, I consider the overall mode on a 4-hour chart here to be still bearish. So currently, it's definitely probably to favor long engagements in the euro, also from a short-term perspective, intraday perspective. Nevertheless, with my thoughts in mind around the ECB next week and the potential here for the ECB to really try to down-talk the euro in some way, there's a good chance that here there won't be a break of this region, but instead that such a push higher should be sold with another sharper attack on the downside we probably get to see. Only problem I have with Euro USD is that the US dollar is also quite weak. If you look, for example, at the developments now. So yesterday, again, yes, we were higher. Nevertheless, my thoughts are still the same as already presented yesterday, even though there were some doubts. The thing is that the US dollar was capable of really pushing higher based on the quite hawkish comments from Jay Powell on Tuesday in front of the US Congress. So now US dollar has obviously lost some momentum here. And I have to say, I consider, if really my thoughts play out as presented several minutes ago, I consider the euro to be weak, and I also consider US dollar to be weak. Probably euro will be a little weaker than the US dollar, but with this said, I think next week probably euro USD is not my first choice. If really, and this is the thing, if the ECB plans to somehow down talk the euro, but probably I would look for another currency. And there's something really interesting. For example, when looking at the dollar Japanese yen. So currently, dollar Japanese yen is pushing towards 105.50 again. There were comments in the morning that the BOJ could consider reducing their asset purchases from 2019 onwards, April 2019 onwards. And these comments are probably right now pushing the Japanese yen higher, but it's also that there's potentially some risk aversion building in the market. And we know that there usually happens kind of an unwind in carry trades then, which causes Japanese yen inflows here and usually pushes Japanese yen higher on a broad scale. And with this in mind, I have to say that somehow I think Euro Japanese yen could be a very interesting currency pair to watch next week, especially also after we've broken here below 132, 131, 132, this region here. I think this is a clear bearish break. And we have further potential on the downside, down towards 128 probably. And potential driver and a deliverer for momentum here on the downside in Euro JPY is the ECB, probably, and also some kind of risk aversion hitting the markets. And it's not sad, I think, that we have seen the bottoms here too. So with risk aversion probably hitting, and then also the ECB probably delivering euro weakness or speculation, fueling speculation that there will be a prolongation of the QE program, there's a good chance that Euro Japanese yen probably will see a quite strong move in the next week. Definitely something to watch at. So currently I don't have a trading setup or something, but definitely worth watching, because I would consider Euro JPY to be really interesting. So yeah, and now with the last look here at the DAX and seeing that it keeps on drifting lower towards this key support around 11,900 points, I end this morning meeting here and this trading week. I wish you a nice weekend. Enjoy yourself. Take care. Last hours of the trading week. Watch your stops. Keep watching your stops. And yeah, I hope that you return then next week on Monday to the morning meeting, 10:30 a.m. GMT. If you have any questions, please shoot me an email or contact me via Twitter. Here, the mail address. Again, 1 second. So here. And yeah, so that's it from my end. So talk to you next week then, 10:30 a.m. GMT in the YouTube channel from JFD Brokers. I definitely look forward to it. Happy trading. Watch your stops. See you and bye-bye.